Master Accounting, your ultimate business guide. Hey guys, welcome back to the channel Jake World 035. Are you ready to level up your accounting game and become the go-to financial brain in your business? Look, I get it. Accounting can sound about as exciting as watching paint dry, right? But here's the thing. Whether you're an entrepreneur, an aspiring accountant, or someone managing the books for your company, understanding the fundamentals of accounting is absolutely crucial to your success. So buckle up, hit that like button if you haven't already, and let's dive into the world of accounting. Okay, so let's kick things off with the fundamentals. The building blocks of accounting. Trust me, once you grasp these core concepts, everything else becomes so much clearer. First up, we're tackling the dynamic duo of accounting debits and credits. Now, before you start picturing your debit card and thinking about spending money, let me clarify. In accounting, debits and credits work a little differently. They're essentially two sides of the same coin, representing the flow of money in and out of your business. Every financial transaction you make will involve a debit and a credit, and they always have to balance each other out. Think of it like this. When you buy something for your business, you're increasing your expenses, debit, and decreasing your cash, credit. We'll dive deeper into how this works in practice, so don't worry if it seems a bit abstract right now. Next, we've got journal entries. These are like the first point of contact for recording every single transaction in your accounting system. They act like a detailed diary of your business's financial activities. And guess what? They also use the concept of debits and credits to keep everything balanced. A ledger is where we take all those individual journal entries and organize them by account. You'll have separate ledgers for things like cash, accounts receivable, money people owe you, accounts payable, money you owe others, and so on. This helps you see the bigger picture of how each aspect of your business is performing financially. Finally, we have the trial balance. Think of this as a snapshot of all your accounts and their balances at a specific point in time. It's essentially a summary of all your ledgers, making sure that everything is still balanced. Alright guys, let's move on to something even more interesting. Financial statements. These are like the reports you get at the end of a level in a video game. They tell you how you're doing financially and where you stand. The three main financial statements we're going to cover are the income statement, the balance sheet, and the cash flow statement. They work together to give you a comprehensive view of your business's financial health. First up, the income statement. This statement, often called the profit and loss statement, shows you how much profit your business generated during a specific period. It lists your revenue, which is the money you earned from selling your products or services, and your expenses, which are the costs you incurred to generate that revenue. The income statement helps you understand your profitability, which is essential for making informed business decisions. Next, we have the balance sheet. It's like a snapshot of your business's financial position at a specific point in time. The balance sheet follows the accounting equation we discussed earlier. Assets equals liabilities plus equity. It lists all of your business's assets, which are the things your company owns that have value, such as cash, inventory, and equipment. It also lists your liabilities, which are the debts your business owes to others, such as loans, accounts payable, and salaries payable. Finally, it shows your equity, which represents the owner's stake in the company. Last but not least, we have the cash flow statement. This statement tracks the movement of cash both in and out of your business during a specific period. Understanding your cash flow is crucial because it tells you how much cash you have on hand to run your business, pay your bills, and invest in future growth. Chapter 3. Now let's talk about the tools of the trade. Just like a carpenter needs their hammer and nails, you need the right bookkeeping tools and software to keep your financial records organized and accurate. Thankfully, in today's digital age, we have some amazing options that can make our lives a whole lot easier. Gone are the days of manually entering data into giant, dusty ledgers. Cloud-based accounting software has revolutionized the way businesses manage their finances. These platforms automate tedious tasks, provide real-time insights, and make it easier than ever to stay on top of your books. One popular option is Tally. This software has been a staple in the accounting world for years, and for good reason. It's known for its comprehensive features, robust reporting capabilities, and user-friendly interface. Whether you're a small business owner or a seasoned accountant, Tally has something to offer everyone. Another great option is Zoho Books. This cloud-based platform is perfect for small and medium-sized businesses looking for an affordable yet powerful accounting solution. Zoho Books offers a wide range of features, including invoicing, expense tracking, bank reconciliation, and financial reporting. Plus, it integrates seamlessly with other Zoho apps, creating a complete business management suite. If you're looking for an industry-leading solution, QuickBooks is the way to go. Developed by Intuit, QuickBooks is one of the most popular accounting software programs on the market. It offers a wide range of plans to fit businesses of all sizes, from freelancers to large enterprises. QuickBooks is known for its intuitive interface, extensive feature set, and robust reporting capabilities. But choosing the right software is just the first step. To truly leverage the power of these tools, you need to master the art of inputting and reconciling data accurately. Trust me, taking the time to maintain accurate records will save you countless headaches down the road, especially during tax season. Chapter 4. Now let's talk about everyone's favorite topic, taxes. Specifically, we'll be focusing on GST, which stands for Goods and Services Tax. If you're doing business in India, understanding GST is absolutely crucial. GST is a comprehensive, multi-stage, destination-based tax that was introduced in India in 2017. It replaced a complex web of indirect taxes, aiming to create a more transparent and efficient tax system. Essentially, GST is levied on the supply of goods and services at every stage of the supply chain, from manufacturing to retail. The good news is that GST is designed to be a simple and straightforward tax system. However, there are still a few things you need to know to ensure you're compliant with the law. First and foremost, you need to register for GST if your turnover exceeds a certain threshold. This involves obtaining a GST identification number or GSTN, which is unique to your business. Once you're registered, you'll need to start collecting GST on your sales and claiming input tax credit on your purchases. Input tax credit allows you to reduce your tax liability by offsetting the GST you paid on your inputs against the GST you collected on your outputs. Another important aspect of GST compliance is filing your returns on time. The frequency of your GST returns depends on your business's turnover. You can file your returns online through the GST portal, which is a relatively straightforward process. Chapter 5. Alright, let's shift gears and talk about a crucial aspect of financial management that goes beyond just tracking your numbers, budgeting and forecasting. This is where you put on your strategic thinking cap and plan for the future of your business. Think of your budget as a roadmap for your business's finances. It outlines your expected income and expenses over a specific period, helping you track your progress, make informed decisions, and stay on track to achieve your financial goals. Creating a budget might seem daunting, but it doesn't have to be. Start by gathering your historical financial data, such as your income statements and cash flow statements from previous periods. This will give you a baseline for your projections. Next, consider your business goals and objectives for the upcoming period. Are you planning to expand your operations, launch new products, or hire more employees? These factors will all impact your budget. Once you have a good understanding of your past performance and future goals, you can start forecasting your income and expenses. Be realistic in your projections and factor in any potential risks or uncertainties. Remember, it's better to err on the side of caution and be pleasantly surprised than to overestimate your income and end up in a financial bind. Now, once you have your budget in place, the key is to track your progress regularly and make adjustments as needed. Don't be afraid to revise your budget if your circumstances change or if you're not on track to meet your targets. Forecasting, on the other hand, takes a longer-term view of your business's finances. It involves projecting your financial performance over a more extended period, typically 1 to 3 years or even longer. So there you have it, guys. We've covered the essential accounting principles, how to read and understand those crucial financial statements, the power of bookkeeping software, the ins and outs of GST compliance in India, and the importance of budgeting and forecasting. Start small, apply what you've learned, and soon you'll be the most reliable financial mind in your business. If this video helped you, hit that like button, subscribe for more practical business content, and leave a comment below. What's one accounting skill you want to improve?